Cheviot's Markets Uncut podcast, your weekly insight into the topics and issues which we've been discussing here at Quilter Cheviot. I'm Andrew Jones, one of the investment managers based out of London, and I'm joined today by Richard Carter, head of fixed interest research, and our excellent oil minings and materials analyst, Maurizio Carulli. So morning, gentlemen. The main thing I think that hit me from last week, or certainly from the end of last week, was the famous entomologist and JP Morgan CEO, Jamie Dimon, looking for cockroaches and finding several in the US regional bank sector. This caused a wobble on Wall Street and in Europe. Richard, do you think this is something that's likely to spread and cause further instability this week?
I don't think so, is my base case, as long as sort of economic growth holds up. But you're right. I mean, Jamie Dimon does have a history of sort of making warnings about things that potentially could go wrong in these sorts of calls, and they don't always turn out to be true. He's warned many times about recessions in the UK economy, for example, which often have never come to pass. I mean, there have been a few issues in credit markets in the last few weeks. There's no question about that. I mean, it's the sort of backdrop is that, spreads are tight. There's been a long run of economic growth. There's been a lot of money going into illiquid and opaque private credit markets. So there are a few worries. And what we've seen is some regional banks who have had a share of trouble before. They've suffered a few loan losses, mostly related to fraud, actually, rather than something more wide. And that comes on the back of some defaults, quite high-profile defaults in the kind of auto loans area. So basically, there's been a bit too much risk-taking, probably some maybe slipping of underwriting standards in credit, and that's caused a few jitters. I mean, as long as we don't go into recession, I think it will kind of be fine. But we do recognise that excess yields or extra spreads in credit are pretty narrow, so there's not much room for accidents to happen.
Yeah, it seems to cause us about a nasty panic in the FTSE, and then sort of it's all back to normal 24 hours later.
That's often the way of these things.
Yeah.
And I think people, they sell on the headlines, and then they look at the details and find out actually this is fairly limited to one or two specific things, rather than being a subprime mortgage issue that sort of permeates through the whole markets. This seems to be a bit more narrow.
Yeah, and in France, France seems to have gained a bit of stability with the reinstallation of Sébastien Lecornu as Prime Minister. Do you think the suspension of pension reforms until 2027 will be enough to see a budget passed?
Not necessarily, if I'm honest. I think he's bought a bit of time in the short term. He's survived a vote of no confidence by doing a deal with the Socialist Party to suspend or delay kind of Macron's flagship pension reforms. Buys a little bit of time, but at the expense of potentially more fiscal headaches for France. I mean, there's been over the weekend a credit rating downgrade of their debt, which doesn't exactly help, although in the short term probably the implications aren't brilliant. The bigger problem for him, he's got to pass his budget, and he can't just do it on the nod. He can't just say this is the budget and get it through Parliament. He's basically given opposition parties the chance to scrutinise and vote on the budget over the next few weeks. And given the fractious nature of the Parliament, that seems like it's going to be a tough ask to get that through before year end. So he may do it, but I still think fresh elections are probably on the cards at some stage.
Yeah, I agree. And something else that continues to rattle markets, obviously, is the ongoing trade dispute between the US and China. And I think China's stranglehold over access to rare earth minerals puts the US in quite an interesting position. I've got two questions here, really. One is for Maurizio. I wonder if you could comment specifically on rare earths, if there's anything you think that we should be paying attention to there. And Richard, do you think Trump will end up meeting with Xi at the upcoming APEC meeting, which I think is next week?
Thank you very much, Andrew, for the first part of the question. I must say, the rare earth issue is part of a more general negotiation. Now, what is important? Rare earths are key to producing computer chips, which are needed for many things like smartphones and AI systems, and are also critical for making magnets to power drones, robots, cars, and as well as for the defense industry. Now, China dominates the rest of the world in terms of rare earth reserves and production. It supplies about 90% of the global demand for the 17th rare earth powders. Now, I must also mention that perhaps that the term rare earth is a bit of a misnomer because they are not actually scarce, but they're only found in compounds, not as pure metals. And the problem is that it is extremely difficult to isolate and purify them. And therefore, if you want to produce domestically, you need to invest massively in the underlying infrastructure. The Chinese government has placed some sort of restrictions on its supply of rare earths since basically 2010 for a number of reasons. However, the new and more stringent restriction that they have imposed means in practice that foreign firms must obtain Chinese government approval to export products that have even just trace amounts of the rare earth. And so these represent a quite significant problem and slow the delivery of these rare earths. But I want to stress is not a complete cut. It's just an additional administration burden on them. And this is why it seems to me that is more a negotiation tool than anything else.
Okay, thanks. I was interested that Trump retaliated with tariffs rather than anything else. Richard, do you think Trump will make friends with Xi at the APEC meeting?
Famous last words. I hope this doesn't come back to bite, but I'm almost 99% certain he will. It's all set up for these tariff deadline November 1st. He'll meet Xi a couple of days beforehand, and it'll all be wonderful. And my best friend President Xi and all the rest of it, and then tariffs will be miraculously postponed for another 3 months or so. So yes, I do think he will, but I guess with Trump, you never quite know.
Lots of scope for bouncing the market around on the latest tweet, I suppose. Not that he tweets, does it? It's Truth Social for him. Also to Maurizio again, Trump claims India has agreed to stop buying Russian oil, but I read that India doesn't seem to know very much about that agreement. Do you think the Indian economy will survive without cheap oil? And what effect do you think this might have on the oil price?
Yes, very good question. Yes, first of all, you are very correct in saying that the Indian authorities haven't really replied or acknowledged this accord with Trump. In terms of the impact on the economy, last year India, which is the third largest oil importer, bought about $50 billion of Russian crude, which is about 40% of its overall oil bill. The reason why they have done that is because Russia is offering significant discounts, and therefore it is an economic advantage to them. Also, there is an additional point that the type of Russian crude is quite suitable for Indian refinery companies because of technical issues. I should say that whilst the absolute figure, $50 billion, looks a lot, it is actually only represent about 5% of total Indian imports. And the reality is that what is important is not the size in itself, but the amount of discount that India obtain. And the discount is about 10 billion. So it represents about 1% of its imports. So the answer to your question, will the Indian economy goes into its knees because of that? No. definitely not. But it can represent some problems. Usually in the past decade, India has changed its suppliers and can quite easily modify its supply from switching from Russia to Saudi Arabia. I suspect that they will still buying some Russian oil because nowadays Russia has organized a quite significant fleet of shadows ships, and therefore it's quite difficult to trace the actual origin of the oil. And second, probably China will be buying up the oil that India doesn't buy anymore, if they do.
Okay, thank you. And finally, I noticed that the copper price and copper equities had spiked quite a bit over the recent weeks. I'm interested to know what you think is driving that. What's been driving that?
They have indeed, Andrew. Basically, copper price and copper equities have related significantly in the past few weeks due to two main events that have happened. The first one is the closure of the Freeport Grasberg copper mine in Indonesia, which is creating a deficit in the copper market, which has been reflected in the rising copper price. And second, the expectation of a renewed M&A frenzy among mining companies after the announcement of the merger between Anglo American and Teck.
Okay, thanks a lot. Richard, is there anything else you'd like to add before we close?
No, and I think really we haven't really mentioned it, but the US shutdown is still ongoing and doesn't seem to be anywhere close to resolution. I think the big thing to look out for really this week is we're going to get UK inflation numbers. They've been in the headline a lot recently because of sticky inflation, so they'll be important. And the US statisticians are going to be dragged back from the shutdown to actually produce the US numbers because they're so important for sort of social security payments, all the rest of it. So at least we will get a little bit of US economic data this week.
I think it's interesting how little the US shutdown has actually been on the general sort of news wires and so on over the last week or so. It's really gone quite quiet. It's certainly seen from a European point of view.
So, totally, and that doesn't seem to have affected the stock market or anything else particularly. And it's also allowed people to focus perhaps on other things that are going on in the world rather than the sort of usual data. But hopefully at some point the US government will get back to work.
Yeah, there's been lots of noise as ever. But look, Richard, Maurizio, thank you very much for your insights across all these topics today. That's very much appreciated. Before we draw to a close, if any listeners have any questions they'd like to ask one of our analysts for a future podcast, please put your questions forward to our team of experts by submitting them via the weekly comments page on the website. We'd love to hear from you. To stay up to date with our thoughts on markets and current issues, please visit our website, www.quiltercheviot.com. There you can see what we're doing at Quilter Cheviot, as well as watch past webinars on demand and subscribe to our weekly comment newsletter. We'll be back again next week. And in the meantime, for those of you on social media, you'll be able to see update our content on Facebook, Instagram, Twitter, and LinkedIn pages. Again, Chris, Maurizio, thank you very much for your time today, and thanks for listening.